Welcome to Banking Friendly, the podcast where finance meets friendship and where you, our amigos, join us on a journey to demystify the world of banking and elevate your financial literacy. Whether you're taking your first steps towards financial empowerment or looking to fine-tune your monetary mastery, we're here to guide you with expert insights, practical tips, and a touch of camaraderie. So grab a seat, tune in, and let's make sense of this sense together. Hi, everyone. Today, we're kicking off National Homeownership Month with a very special guest. I want to say all the way from the PSJ area. She's a proud bear, but all the way from our mortgage office, we have Miss Valerie Cardenas.
Thank you for having me this morning.
Yes, thanks for joining us. EVP, we have our mortgage lending manager here. She oversees our mortgage department, our in-house mortgage department. We do everything local, everything there in our office. So we're going to jump right into it. We have a lot of interesting stuff to talk about today, but really I just want to start off with, how did you get to this point in your career with TNB Mortgage?
Well, I have had an extensive career. I've been in mortgage banking for 28 years now. And so, yes, I did start when I was 10 years old.
Yes, that makes sense.
But I really feel that I've come full circle. And the reason I always say that is when I started my career, I guess you could say maybe it was an initiation process. They basically said, not only are you going to learn mortgage lending, but we're going to throw you into all of the state agency programs. So that
Sounds easy enough.
Yeah, easy enough, right? So you're going to learn all the FHA, low to moderate income borrower down payment assistance programs, not any of the easy lending,
Right,
right?
of course
And
not.
so, they always said, if you can learn all that, then you can basically handle any type of mortgage lending. And so I say full circle because with all those years of experience and now working for TNB Mortgage, the bank really focuses on community lending and giving back and helping people get into their homes, sourcing down payment assistance. And so what I started out 20 years ago has come full circle to what, we're really passionate about and what the bank really believes. So it's really gratifying.
So the universe kind of brought you to where you
Yes.
needed to be.
Yes.
Well, good. Well, we're definitely glad to have you. The mortgage industry, mortgages, it's sort of a big, scary world. There's so many things happening. But what do you feel like is the best part of working with mortgages?
It sounds cliche, but there are so many individuals that truly believe that they're never going to achieve that dream of homeownership. Walking alongside them with this journey of homeownership is really the most gratifying. And when you just see that expression of happiness, gratitude, and just being so thankful that you were able to help them achieve that, it really is the most gratifying. And again, I say it's cliche because, so many people say that, but until you experience it with those homeowners, you really know your purpose in life.
Because sometimes people may not think that they can own a home or that they can get to that point, or they're looking at their situation right now and they're like, I don't even know where to start, or how do I get there? But it's still something that it's a dream. It's a dream for someone to own their own home.
It truly is the American dream, right? For them to say that they can own something for themselves, and really pass it on to future generations.
Well, that's awesome. We are here another June, another homeownership month, which really started back in 2002. Won't go too much into the history about it, but FHA, HUD, they really wanted an opportunity to showcase their missions, what they do, their solutions for affordable, accessible homeownership. And so for us, it's really exciting to be part of that because, like you just said, that's part of what we do. That's part of why we have a mortgage department. It's part of why, your team comes to work every day and they do the work that they do. So it aligns with what we do in TNB Mortgage. The Valley is such a special place. And so what are some trends that you're seeing in the RGV when it comes to housing?
Right now, what we're seeing is inventory levels are rising. So it's always been said that 6 months of inventory has been a pretty healthy or stable level.
Okay.
And so we're already at 8.5 months, right? And so what that translates to is that it's slowly becoming a buyer's market, right? Because as we flood with high level of inventories, well, there's more to choose from, right? And so that's a positive for buyers, right? Because it allows them to negotiate from a plethora of homes that are out on the market. We're also seeing, because of the affordability challenges, that the biggest price category that is pulling is between 200 to 299,000. Okay. Where maybe, 5 years ago, that was kind of inching more to the 300, to 350,000. And so it's come back down because it's become challenging for people to afford, a mortgage payment.
Right.
And so the affordability is now centering between 200 to 299,000. And the other thing that we're seeing, is that there's also a lot more seller concessions. And so
Okay.
what that means is that sellers are offering anywhere from five to $15,000 in seller concessions. So, that could come in the form of closing costs.
Okay.
That could come in the form of credits. Maybe the house needs a new roof, so they'll say, "Hey, we'll pay for the new roof," whatever it may be.
Right.
So there's a lot of incentives, right, to attract home buyers to buy a particular house. So
Okay.
we're kind of seeing those trends in the market right now.
What is a credit score? Why is it important? What part does it play in the mortgage application process and all that good stuff? So even if it's their first step, they're just talking about where they want to start. You always ask about the credit score.
And that's correct. And you're saying it's a big part. It's one of the key components, right, to qualify for a mortgage, because your credit score tells a story.
Right.
It explains the behaviors, right, of payment patterns. And so, are you responsible in making that car loan payment, the credit card payment, the student loan payment, whatever payment, right, is reflected on your credit score. And so it basically, yes, explains what kind of behaviors, are going on in your repayment history.
Okay.
That's important, because a credit score can determine what interest rate you're going to, to be given right at the time of approval. If you're approved, right? So it's going to factor in, are you approved? And two, it's going to basically say, well, you merit this interest rate. And so that interest rate translates to, what is your payment going to look like?
Okay.
The lower the interest rate, lower payment, higher interest rate, higher payment. And all of that affects your qualifying, because if you have a higher payment, aside from the rest of the payments that you're carrying, right? We talked about a car loan, a student loan, credit card. Are you going to be able to qualify overall in relation to your income? And I know we're going to have other segments, throughout the month that talk about that. But just that one credit score is a domino effect to other qualifying factors.
Okay. Well, then I guess we can just jump right into it, with the basic question of what is a FICO credit score?
So, a lot of people throw the term around FICO. So FICO is basically Fair Isaac Corporation.
Okay.
And so your FICO score can range anywhere from 300 to 850. You want to be on top of that.
I was gonna say,
that,
the higher the better.
the higher the better. In the past, 680 used
Okay.
to be a good score. And it is, but it's not the best score anymore. And so, as we alluded to, right, the higher the score leads to a better interest rate. And so when people say, well, I've got a 680, well, that's good. And you'll probably get approved, right? And there's nothing wrong with that. But when it starts coming down to, well, what kind of interest rate am I looking at? You really need to be at a 740 or greater to kind of start getting that premier interest rate price seat.
Okay.
Based on certain programs, right? There's going to be certain programs that really don't generally affect the interest rate, say FHA. It's more lenient. And again, I know we're going to talk about it in other segments throughout the month. But there's a lot of other programs that it strictly ties to the credit score. And so that's why you want to be on the top end of that credit score.
Awesome. So what exactly makes up the credit score? Because I know you talked about history and things like that. So what are some of the components of what makes that number?
So what's going to make that number is, of course, are you repaying on time, right? That's the biggest factor. The other one is the usage of your credit, right? So as an example, if you are allocated a $10,000 credit limit on a credit card, but you exceed 30% of that. So 30% would be $3,000, right? So if you're exceeding that $3,000, it basically starts measuring, are you getting ready to max out on that credit card, right? And now you're not going to have any other source of credit available, right? The other thing that drives it too is, how long have you had this credit card, right? So the longer that you've had something open, the more history is gathered. And so a lot of people have this perception that, well, I was told, that I don't use this credit card anymore. Let me shut it down. Well, you lose all that history, right?
Okay.
And so It's also measuring how much credit are you opening in a short period of time, because now it basically thinks, well, you can limit out on this credit card and this one and this one. So it's going to look at the number of inquiries that you have within a certain period of time. And
Okay.
so, there's some other factors. I'm sure I'm forgetting some, but that's going to basically kind of score you at different levels. Some carry a greater weight than others, like the repayment history.
Yeah.
That's probably going to carry, I think, about 35%.
Okay.
And don't quote me exactly because I know percentages change.
Yeah.
But there's going to be some that are weighted greater than others.
So, what can negatively affect the credit score? I mean, you work so hard to get it up and to work on it. So, what are some things to look out for to kind of not set yourself back?
So kind of, the same things that we talked about, right? You miss a payment, that drastically drops your credit score. And certain categories are going to, again, weight it more. So for instance, a mortgage payment, that's a severe payment, to be late on.
Right.
Different than if you're late on a credit card payment. I'm not saying to be late on
Right,
either one,
right.
but one is going to greatly affect you versus the other, right? So a mortgage payment being late is going to drastically hit you. Again, if you are taking out credit cards, you take out 5 credit cards in the span of a month, that's going to negatively, affect you as well. And then again, negatively affecting you is going to be maxing out those credit cards or even going over 30% of your credit limit. And those are rules of thumb, right? There may be some minor changes to that, but good rule of thumb is you don't want to exceed that 30%, because the higher you start getting on that credit limit, it basically thinks you're going to max out, and now you're going to jump to the next credit card to max that out.
So, what are some ways you can recommend someone to work on improving that credit score? They come to you and you're like, okay, maybe not now, but 6 months from now, here are some things that you need to focus on to get to that next step.
Understand what you have and start creating a plan. Maybe you need to pay down some debt, right? Because again, credit score and understanding what's on your credit report all factors into different levels of qualifying. And so you want to understand what's on there so that you can prepare, put a plan together for yourself to say, let me start paying this down. Which one can I pay down first? Which is charging me the most interest rate? Credit cards have high interest rates, right? And so that interest payment is just eating you up. So it's always good to pull that credit report on yourself annually, look at it, and start preparing a plan for yourself.
Okay. After all this conversation, after we've been kind of talking about their credit score, it is important. It does give you a good solid foundation to start that process.
It does, and one of the things that I failed to mention, or not failed, but forgot to mention, is the fact that you had asked, what if you don't have a credit score?
Right.
So one of the other things that we encourage our borrowers is to provide us with what we call non-traditional forms of credit.
Okay.
Credit bureaus started allowing is for those that are renting, for them to basically self-report their rent. And so, they can ask their landlord to tie into the credit bureau, and that will start creating a credit score for them to demonstrate that they're paying their monthly rent on
I did not know that.
their
Okay.
utilities as well. A cell phone bill,
Yeah.
the light bill. Those companies can now report to the credit bureau to say they're paying their AEP bill,
Right.
on time, or their T-Mobile bill, or whatever it is. So those are basically non-traditional or alternative forms of credit to where they can start building that, so that it's kind of a segue into them getting traditional forms of credit.
So I really thank you for being here with us
Yes.
today. It's a good way to start off the month, to start off homeownership month. If someone's ready to get that conversation going, they're ready to start, where can they find you?
So we have a wonderful team. They are very well versed, willing to help our clients. We are located at 4155 Cross Point Boulevard. We have our TNB Mortgage Center, and we also have a lender in Brownsville, at our Brownsville location. And so you can also reach us via our website. We also have a mobile app, to where they can apply, in the comfort of their own home if they want to, or just simply call in for some general information. And so we've got all of these resources available.
Great. Well, thank you again for joining us. It was a fun way to start off National Homeownership Month. We hope you stick around for the whole month and see, what else we have in store.
Thank you for having me.
Thanks again.